Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we did see strong gains across the board in this early rally attempt. But Justin, we're going to take a look at what was driving the gains underneath the surface, and it was the junk for the most part.
Yeah, that's a way to put it lightly there, Ali. So we'll take a look at Doubleverify and Sarepta Therapeutics, both of which I think are stronger stocks,
Mm.
but we'll also head them off at the pass and talk about Roblox because we had a lot of questions on that on IBD Live this morning. And I think that kind of belongs in the junk pile for now. So
Mm-hmm.
we'll talk about that.
Yes, sounds great. Well, first, let's take a look at the major indexes. The NASDAQ today up 3.4%, followed closely behind by the Russell 2000 up 3.3% today. The S&P 500 up 2.7%, and the Dow up 1.9% today. So those are some pretty strong numbers, Justin, in this early rally attempt. But along with the strength in numbers, to me, that just means, all right, a continuation of the volatility here. At least it's to
Exactly.
the upside.
Right. At least it's to the upside today, but who knows what's going to happen tomorrow? And let's put this in context because as you're able to see on the chart here, this was still an inside day. As strong as the day was, up 3.4% on the NASDAQ, and we couldn't get above Friday's high, because of the reversal that happened on Friday. So, again, it's hard to get too excited about something like today where you've got a lot of progress that still needs to be made to kind of show that this is able to break a trend at all. We've been talking about kind of the short-term downtrend line kind of following a channel here, and we're not above that. We haven't broken above that channel, and it could easily be seen where we could get up to that and then fall back down and stay in this channel. So until more evidence comes out, and especially what I didn't like about today was just a lack of leadership. There just wasn't like a bunch of stocks that you could point to. It's like, oh, look at these stocks breaking out. Look at these strong stocks just getting stronger. It was really kind of a lot of bottom fishing that was driving some of the biggest gains on the market today.
Yeah, well, let's talk about that a little bit more, Justin. What was leading today? Give us some examples so we can get this visual picture in our mind.
Okay, so I mean, you can go through these charts real quick, and
Yeah.
what I want people to notice is how many of these are just in horrible downtrends and below their 200 days. So I mean, we can start with Ceridian CDAY. That was the top gainer on the S&P 500 today. Up 8%. You had Dish up 7%. Tesla, I mean, that's been looking pretty bad lately.
Mm-hmm.
Match, MTCH, CZR, Caesars Entertainment, Netflix, Amazon, Intuit, INTU, Etsy, Bank of America had earnings, and some of the banks are looking a little bit better, but there's still a lot of destruction out there
Yeah.
in this area. So, this is just kind of the top movers. And if we go over to the NASDAQ, it's pretty much the same story where it's really kind of driven by some of the ugliest looking charts. So over on the Nasdaq, let me just pull that up real quick. I had it for a second and it just got lost. But a lot of the same thing where you're seeing some of the worst names there, that are leading. So Mercado Libre, MELI, and now you're going to start recognizing a lot of names from our former glory days.
Yeah.
So Atlassian, Team, Zscaler, Tesla, Match, Datadog, Airbnb, Workday, Zoom, Video, ZM, Okta, Nvidia, Meta. So I mean,
Wow.
these were,
This is
PayPal. These were the top gainers
bottom
on the
fish
Nasdaq
city.
100. So that when I see that, that just kind of doesn't give me the confidence that the true leadership is where I'd like to see
Mm-hmm.
it. We like to see those stocks that were holding up, getting stronger and breaking out. But what we saw here today, and what's so funny about so many of these charts, and we'll see this with Roblox, is they have these big gains, but it's like
A little
because the
blip.
chart has been so demolished, it hardly even shows up as a blip, in some of these cases, even though the gains are 5%, 10%.
Hmm. Well, Justin, there might be some traders out there thinking, well, what's wrong with bottom fishing? I mean, after a bear market, isn't everything gonna eventually, once we do get a for real bottom, which we don't know yet that we have had, why not? Why not look at the cheap pile?
Well, the problem is it's very hard to pick a bottom. And, for those people that don't think something can go lower, they're often proven just horribly, horribly wrong. I mean, let's just look at Shopify, which was one of the market darlings, of course, and look at how that looked in March. If you look at March, I mean, that looked like a bottom, but a few weeks later, and we were plumbing to new lows. So there were so many people that thought that 50 must have been as far down as this thing could go. Remember that Shopify, when it topped out, it was well over 100, and closer to 200. And so yeah, once it's down 50, you think, oh, that's as low as it can go, but it went lower. And then even in kind of the summer, you know at 30, it looked like, oh, well, now it's finally bottomed out. You could see it trying to get back above its 10-week line, but then it just got very volatile and it ended up going lower. So I don't think, I mean, look at how volatile Shopify got there. I don't
Hmm.
think that's something where you can easily hold on to something as a trader. It's something that's just too easy to knock you out. And this is where it's more important not to get the lowest price, but to get the price where the odds are most in your favor. And so
Hmm.
rather than trying to bottom fish and say, oh, I got this at the very bottom tick, you know it's okay to wait a little while to let the stock prove itself, because when you get a better pattern, that's where the odds get more in your favor. It's
Hmm.
just really hard to it's just really
Right.
hard to catch bottoms.
Right, exactly. Yeah, two other bullet points about things being in your favor. What, some 12%, only 12% of leaders in a previous market cycle will come back to lead again. So that kind of seems like the odds are stacked against you with something like this. And also, Bill O'Neill put it best. You want to be buying stocks that are already going in the right direction,
Mhm.
and that is up. That's why we focus on uptrends.
Yeah, absolutely. So again, that's one of the reasons why I think bottom fishing is just so perilous. Sure, you might be able to do it and capture one, but it's usually kind of a luck of the draw thing. And there's just so much more potential and opportunity with
Mm-hmm.
those stronger stocks that can become the next market leaders.
Yeah. So for every one frog that you kiss that turns into a prince, a lot of them stay
A lot of them
frogs.
stay frogs, right?
Ah.
Exactly. And it's Mark Minervini. I really like the way he put it. And when he was on IBD Live last week, he called
Hmm.
it a needle in a haystack market. So yes, you can get lucky and get that needle in the haystack, but you often find that you'll also get a lot of
A lot
hay
of
too.
hay, right? Yeah. All right. Well, we had to get on our little bottom fishing soapbox there.
Yes.
But really quickly, before we talk about individual names, let's talk about some key levels that we're watching. Not only that downtrend line that you mentioned and Friday's high, we've still got the 21-day line. We've also got the highs from early October. That we've got this downside reversal from late September, and that puts us kind of right around the 50-day line. So those are just some three short-term hurdles that we would like to see. Justin, what if we do get a follow-through day tomorrow and it's still, let's see, where are we in relation to the 21-day line? Okay, so we're about it's a little less than 2% below the 21-day line. How would you feel about that? Do you feel like that lack of leadership that we saw today, can that drastically improve or improve just enough tomorrow to make you feel like a follow through day uh, at this stage of things might work?
I'm going to be cautious. I'll be honest. If we see a follow through day tomorrow, um, and the reason I'm going to be cautious, not because of the macroeconomic picture,
Right.
because I've seen it before where things can look very bleak, but the market does, what it
Mm-hmm.
does and can, power higher. But really, what's going to make me the most cautious is what you alluded to, that lack of leadership, that lack of merchandise to buy. There's a
Yeah.
few things out there that are setting up and looking decent, but for the most part, it's still in a lot of defensive areas.
Yes.
A lot of oil and gas
Yep.
names, are still driving what's looking the best out there. So it just isn't really that broad-based growth that is looking the strongest right
Hmm.
now. So, I if we get a follow through day tomorrow, I'll probably buy something, but I'm not going to be going very heavy. I try not to do that on follow through days, and certainly not when there's not a lot of merchandise to buy.
Hmm. All right. Well, thank you for updating us on your plan there, Justin. Okay, let's take a look at Double Verify, ticker DV, which had a gain of about 5.8% today. Didn't get above average volume, but it's looking interesting here, Justin. Walk us through your thoughts on the chart.
Well, and so number one, it's above its 200-day moving average line. So not much, but still it's above it. Number two, look at how when the market's been making these lows, this has been really holding at higher levels. So we had that move down to 2028 back in June, and then it came down, pulled back to 22. Then it came down, pulled back to 24.97, then 25.36. Each time it pulls back to a higher price. So when you get that string of higher lows, it's kind of telling you that you're going in the right direction. And so while that 200-day moving average line is still in a downtrend, it looks like it's on the verge of turning up, and we've got something. It's got an interesting business. It's got some very strong numbers. They're kind of in the business of verifying, for advertisers. Hey, are you really getting the clicks that you're thinking you're getting?
Hmm.
Making sure that there's not fraud out there. Really interesting stuff happening with the company. So this is one that is on leaderboard currently. It's back above its 10-week moving average line, and again, I just like the way that it's making those higher lows. When the market's been going lower, this is able to hold, and so those are the kind of the tells that we like to see from our leaders in future cycles.
Right. And speaking of it being a potential leader in the next bull cycle and also on leaderboard, that 10-week line has been what's been keeping us in the trade. A couple of days there over the last couple of weeks have put it on the bubble, but
It
it's
got a
always
little hairy.
managed. Yeah, it got a little hairy, but it's always managed to, at least for now,
Mhm.
has managed to close above that key level of support.
Yeah, so I don't look at this as necessarily something you need to get into right now, but if you kind of look at uh, a level, 10 cents above 29.92, that's 30.02. That makes sense. Maybe even an early entry at 29.19, 10 cents above that previous, but certainly when you got above that 10-week moving average line, I think it's something that is showing strength and could have some potential buy points in the future.
Hmm. We'll keep it on our watch list. Also on the watch list is SRPT, Sarepta Therapeutics, a biotech stock that's definitely standing out with this relative strength line that is continuing to move higher and has a blue dot on the weekly.
And what I like about this on the weekly is look at how strong this move was that it had from, like, roughly 60 and change, all the way past 100, and it held it. This is where if you just kind of go over that pattern recognition, it'll kind of tell you the depth of this latest base, 14%. Given that strong move, the fact that this only gave up 14% is pretty incredible. That's really strong. That's why the relative strength line is looking so strong. Here again, we're really holding above that 10-week moving average line. In fact, in this case, it just let that 10-week line catch up to it.
Hmm.
It's almost like, here, I'll wait for you. And that's the kind of volatility contraction that I think we need to see in more stocks in this market, where you just aren't seeing as wide of movements. So this was a very big move that it had, but then it held tight, got much, much tighter. And I'd like to see that happen in more stocks. But this is certainly one that is technically speaking, looking pretty strong. We had this as stock of the day today. Allison Gatlin, she's the one that is usually writing our biomed biotech stuff, and she does such a great job of
Yeah.
making this complex field a little bit more accessible. And certainly one of the things that came out today, some analysts were upgrading their price targets, saying that their Duchenne muscular dystrophy treatment is probably going to be first to market out in Q2. Really positive benefits to it, and a lot of addressable market that it can be capturing with that first to market share.
Mm-hmm. So we talked about potential buy points for Doubleverify. What about for this one, Justin? It looks like the early entry that we were eyeing for this stock didn't see an immediate payoff. Does it need even more time to continue to set up here?
It could. And you could certainly be using the flat base breakout. It's still a flat base because it's 14% correction, so it's within that 15%. You could use a little bit of an early entry at those tops that you mentioned, or you just drew 120.33 as the traditional buy point. So anywhere in there, but a lot of this is going to be market dependent, right? If you don't have that market going in your favor, what we've seen lately is a lot of these breakouts fail. So you just have to kind of keep that in mind. If you want those odds to be more in your favor, you want to kind of have the market, chugging along behind you. And while the biomed biotech area has remained one of those areas providing a lot of strength, it's a big area, right? So it's got a lot of dogs in it too. But at least when you're looking at some of the stronger stocks, a lot of them hail from that biomed biotech area, and you can see that it's number 5 out of 197. So you start looking at a strong group, and then look at the strongest names in there, and there's 800 names to choose from.
Yeah.
And then if you can get that market behind you, that's where your odds really start improving.
Yep, we like to see it. Okay, last but not least, Roblox. It was up almost 20% today, Justin, and some heavy volume behind this. Moving on, some news reporting strong metrics for September, a 23% year-over-year increase in daily active users. So that's strong, and seems like that would definitely be something that would be especially interesting in a 2020 market. But in 2022, yeah, you get that percentage gain, but that black line there on the chart, which you've talked about, that 200-day line, it still has not quite yet been able to conquer it.
Yeah, we use the term looming a lot. That 200-day line is just looming right now. And it's so funny because a 20% gain here, it looks minuscule on this chart because there's been so much destruction, because you've had days that have been down more than 20%. That gap down back in February was, what was it, a 26% drop? 26.5% drop, and you've just had so much volatility in this stock lately. A lot of days where you're up 8-9%, and then you're down 8-9%, 11%, and so it makes it so that a 20% day just doesn't really stick out. And to me, and look, if you had the stock before, great, you got that gain. But if you didn't have it before, and you were buying it when it opened up 17-18%. So, okay, you got a couple percentage out of it, but you have this huge downside risk now of it coming in, filling in that gap, losing some ground. You just don't have a lot of wiggle room here in order to set a stop before you get in trouble. So to me, that's what bothers me about this type of bottom fishing is, okay, how much room do you give something that's this volatile to not get shaken out and not destroy your portfolio in trying to capture it?
Exactly. So who knows? Best case scenario, a step in the right direction, but it needs to prove itself more before we would consider it. Step 1, getting above that 200-day line, making more progress, and then seeing more of an uptrend here, and getting the market to cooperate and a proper buy point.
Those are a lot of asks, Sally. Those are a lot
of
asks.
Like I've said before, I have a lot of needs.
You're such the diva.
Yeah. Prove it to me, market. Prove it to me, stock. We have the luxury of, as individual investors, of getting to be picky, right?
Yeah, we don't have to be fully invested. We can make our choice to sit out, and I think for a lot of people that have been sitting out, look, if you're anywhere close to flat for this year, that's huge outperformance versus the market, right? So yeah, I'll take flat versus down any day of the week.
All right. Well, thank you, Justin. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live. So please join us. Day 4 of a rally attempt. You'll get the team's thoughts, including David Ryan, 3-time U.S. investing champion and protege of IBD founder Bill O'Neill. So don't miss it, investors.com/IBD Live for all the details. We'll see you 10 minutes before the opening bell, and we'll also see you right here after the close. Thanks for watching.